Good afternoon, everybody. As Jake said, I'm one of the 5 general partners at Veteran Ventures Capital. I'm an Air Force veteran, Air Force Academy graduate, class of 2001. And after 11 years active duty, have transitioned into the reserves. Was a finance officer in the military, and then had a corporate finance career. But for the last 5 years, I have been devoted to this cause and this mission oriented investment fund, which is Veteran Ventures Capital. We have been active in the early stage business of backing veteran companies at the intersection of dual use technologies and veteran leadership teams since our inaugural fund in the 2020 period. And so go ahead and turn to the next slide, Martha. So as an overview of who we are and what we do, for those that don't have background on our fund, we started in 2020, raised a first fund of $20 million. That's pooled capital from a large group of investors from this network, veteran investors, family offices, high net worth individuals as well, who really were convicted about supporting veteran entrepreneurship and making military service a gateway to entrepreneurship. That was our founding belief. And we used our first fund to prove out that thesis, and it's gone exceptionally well. And so I'm here today to update you on where we are in the first fund, and then announce that we have opened our second fund as of the first of this year. And we have what we call the Valor Fund, which is a pooled vehicle that allows investors to come in to the main to Veteran Fund 2 and support early stage companies. So let me say a little bit about what we do. We've invested into 14 companies. We invest from late seed to Series B type companies, and so that means that they have revenue. These are not ideation companies. They have revenue typically over $1 million of ARR. Somewhere between $1 and $5 million of revenue is generally when we enter. And then we work diligently. We write a check, usually between $1 million and $3 million into those companies. And then we roll up our sleeves and take a very active role in creating value and building those companies and supporting those entrepreneurs. And the reason that we do that is because what we learned from being entrepreneurs ourselves post-military service is that when military veterans, they make outstanding leaders, they have great experience, but they really need 2 things in order to have success at building companies in the private sector. One is capital. Veterans are a third less likely than their civilian counterparts to be backed by venture capital, and we think that's a market failure, and we look to trade on that arbitrage. And then secondly, they need a network of skilled operators and experienced people that create the network and the scaffolding to help them be successful. And so our partnership group has had successful exits in the private sector, and we roll up our sleeves to help our companies. And so I'll talk a little bit about some of those companies today. The important thing on this slide before we move to the next one is we invest not in any veteran company, but we really try to invest in an area where we think we can add the most value, which is in the area of dual use technologies, which means that it has both a government customer as well as a commercial customer and marketplace. And so one of the things that where we add value to those portfolios is that in addition to writing the check, we help them gain access to government contracts, government grants, think of SBIR awards, but also larger contracts such as DARPA R&D programs. We have research and development programs with both the Air Force, the Navy, as well as the Army. And over our last 3 years of deploying capital, we've invested a little over $13 million into these companies. But we've been able to garner over $125 million of non-dilutive capital to help accelerate these companies. So really a 10-to-1 accelerant to what the capital that these companies need to grow. Next slide, please. So as you look at the opportunity, I've been a large proponent of private investing within this military investing circle for some years. It's not something that I learned during my military service time. It wasn't until I transitioned to the private sector to realize that there is a whole nother community of investment opportunities in the private placement space that weren't accessible to me while I wore the uniform, or at least I didn't know about them. But now I do, and I'm a very big proponent of private offerings in both the real estate space as well as private enterprise. And so what I would say that is the best opportunity about this fund is really about the opportunity for alpha. So growth, high growth, and accretive type investments that have a long-term horizon. So this is a venture fund that typically has a 10-year horizon. But we're targeting 3x growth over a 10-year horizon. That's our objective and our aim of a venture style fund like this. So it really gives you an opportunity with some portion of your portfolio to swing for the fences, and that's why we invest in private equity. Why you should invest with us? Multiple reasons. One is that we've proven our ability to grow value through our first fund. We are currently, as of the end of year 2023 financials, we've delivered a net IRR in our first fund of about 16%, and about $4.5 million of value that's been created in our first round of investments, and that's only after about 2 years of investing. So we've proven our ability to create value in these companies and make smart investments. We have cultivated a proprietary and quite successful deal flow. We have some co-investors that we like to invest with that bring us deals, and we've earned some reputation in the marketplace as not just an investor, but also a company that adds strategic value. And so we're being invited to some of the best national security deals. The third point is that we do leverage capital to its fullest. So we're very careful with our investor capital, and we pursue government opportunities to really match and magnify the impact of our private investment. And so we were a little capital constrained in the first fund, to be honest. We had $20 million to deploy. We deployed into 14 companies. We could have written bigger checks into the companies we saw, but we were constrained by our fund size. So we are raising a fund two at a larger amount. We're targeting $50 million for the overall fund, so that we can write bigger checks and have a larger ownership stake in the types of companies that we are investing in. And then last but not least, we believe in triple bottom line. So investing in us is delivering compelling financial returns that beat sort of the S&P 500. We are interested in empowering and supporting veteran entrepreneurs, and last but not least, fortifying our national security. Next slide. I'm not going to spend a bunch of time on this. I'm going to abbreviate the pitch for sort of the quick pitch today. But where we invest is where the defense budget and critical technology areas for national security. Everyone knows that the Department of Defense is the largest customer on Earth, and that defense budget is bipartisan today if Congress would vote on it, and they have now. And we expect that given the geopolitical risk in the world today, that bipartisan consensus and the need to continue to invest in defense technologies will continue. Last year's R&D budget was $145 billion, the largest ever. And we are in the private capital side of that. So matching both government R&D programs with private capital to help commercialize. Next slide. We invest in 6 key technology areas that aligns with the national security R&D critical technology areas. That's space technology, it's autonomy and robotics, which includes drone technology, quantum technology, C5ISR. For the military folks on the call, you know what that is, but for everyone else, it's sensors and data and command and control, the ability to see and interpret that data to make command decisions. AI and ML is obviously a very active investment space, and then material sciences. And so the point of this chart, before we move on, is that in the defense area, while the M&A and sort of IPO market is broadly closed over the last 2 years or really slowed down as far as exit activity, what has happened in the national security and defense space is that market has really not slowed down. And so over the 2-year period of 2022 and 2023, you can see the statistics at the right. In these 6 verticals where we invest, there is still quite a bit of activity investing, and those are strategic companies that are buying the assets, and that's where we hope to see our exits as well. We invest in the early stage of dual-use technologies, and ultimately the companies that we invest with are going to be bought out by private equity or defense primes, and that market is still very much open. Next slide. This is our team. So you know me here today, Air Force veteran. Our founder and managing partner is Darren Burrell. He's also an Air Force finance veteran. I've known Darren for 20 years when we were stationed in the Pentagon together in the Air Force Budget Office in 2004, 2005 timeframe. And he started our firm in 2019 and then built this really amazing team around him. Steve Kaiser and I, also another Air Force veteran, he was an intelligence officer, did 9 combat deployments, and then his first job out of the military was as a tech scout for the Office of Undersecretary of Defense. He leads our deal flow. He is very tied into what the requirements are from our combatant commands, what DoD is looking for in critical technologies, and making sure that that we can bring those commercial technologies inside of DoD. The other 2 members of our immediate general partner team is Craig Jakes and Paul Woolard, not veterans themselves, but have veterans on both sides. Both fathers in the military, siblings in the military, et cetera. This is a passion project for them as well, and they bring a great skill set. Paul stood up 2 corporate VCs during his corporate career, and Craig Jakes has built multiple government contracting pipelines, knows how to win proposals. The last person on this chart is Ken Hirsch. His family office is the main anchor in our fund and was the lead that really seeded our fund with its first capital. And his family office continues to play a very supportive role from our investment committee. Next chart. I'm not going to spend a deep dive into this. This is our portfolio from Fund One. I would encourage anyone who wants to learn more about our companies. Our website at www.veteranventures.us has a full breakout of our portfolio. And I'm happy to share, we're in a very transparent way where we've invested our capital and why. And I would encourage anyone who wants to learn more about that in a longer session to schedule time with me, and I'm happy to break that down. The last thing I'll just point out here is that we are fully deployed in our Fund One in either checks we've already written or follow-on commitments, and that's why we're raising our second fund. And then last but not least, here's a breakout. In the middle chart there, you see the non-dilutive government funding awarded, and that's broken out by company. We track that very closely because it's a very tangible figure of how we're having impact in our companies. And like I said, it's over $120 million now. This is a slightly dated end of year, but over 125 million that we've brought to those other companies. Next chart. Again, this is a chart that I would go to in more detail as you want to when we have some time together. This is our due diligence and how we run our deal flow process and our investment committee. We saw over 500 deals last year throughout the veteran dual use community. We took pitches from about 100 of them, and we invested in about 5. And so that shows sort of the selectivity that we have to make sure we're allocating in the most smart way. And we have a group of outside advisors that help us both diligence the companies and negotiate the terms that we invest. Next chart. These are some of our advisors and investors. I think everyone on this call knows Stan McChrystal. He was one of our earliest supporters, and he believes very strongly in this mission of investing in veterans and creating a supportive architecture around those entrepreneurs. Phyllis Newhouse is an Army veteran herself. She's also taken 3 companies public and is a great mentor to our companies. Dave Alpern is a believer in supporting veterans. He runs a healthcare-focused private equity firm, and he has been really instrumental at making sure that we set up a very professional private equity firm. And then Jeff Immelt, former CEO of General Electric, is one of our investors and has co-invested alongside us in several of our deals, and then is a board advisor to several companies. Next chart. And then this is that no one on this call needs to understand why we invest in veterans. Everyone on this call knows that they're a smart investment. They outperform their civilian counterparts. They have the right character and determination and grit to overcome. And like I said at the top of the call, what they really need is capital and our capital to support them and get launched. And secondly, a scaffolding to support them in their entrepreneurial journey. Okay, last chart. So here's the investment terms. What we are doing is raising our second fund. We have a special purpose vehicle that's under a 506c offering for all accredited investors. The minimum investment is $50,000, makes the fund way more approachable. A typical limited partner would need to contribute $250,000 to be a participant in the fund. But we have always had from our beginning the belief that veterans should be investing in veterans, and also the ability to have access to a private investment that offers compelling returns. And so we make this opportunity available. We call it the Valor Fund for investors in a much more approachable way to invest $50,000. It is a long-term offering, a 10-year venture fund. We deploy over the first 3 years, then create value over the next about 3 to 5, and then the last 3 to 5 years is harvesting, where you'll get distributions. And it is a traditional 2 and 20 model, which means a 2% annual management fee, and then carried interest of 20% to the GP, and the limited partners get 80%. So with that, I'll wrap up my presentation. I really appreciate the time that you devoted to this call. And Jake, thank you for your contributions to the entrepreneurial veteran ecosystem. I really feel the momentum that we are doing really great things to support our fellow brothers and sisters in arms who have decided to look at military service as a pathway to entrepreneurship. And that is what our fund is all about, is making sure that we can continue to move those people up the value chain for some very large and accretive exits. Thank you very much.